Okay, everybody, welcome to today's Audit and Finance agenda. There's one addition from the original agenda that was out there regarding Resolution 3H. At this point, I'd like to discuss Motion 1 that is on there regarding the SUNY Oswego Green Route Agreement. Steve, you're going to take this for us?
Actually, Mr. Chairman, I'll take it for you.
Okay.
So we do Motion 1 and Motion 2.
Sure. Very good.
Green and Blue annual contract with SUNY Oswego. So the first one is auxiliary services provided from August 1 to July 30th of next year. This is a contract renewal, not a new contract, at about 105.6 per hour. And the other one is, again, auxiliary services for the green route for the same time period and the same rates. And again, it's a renewal, not a new contract.
Okay, pretty common in higher ed. Any questions? Okay, without that being said, I need a motion to bring it to the full. Tina, second. Robert, all in favor?
Aye.
So we took both of those motions together. Is that okay?
It's fine.
Okay.
Thank you.
Motion 3, welcome Christine and Linda. We're going to talk about the financial reports for the first quarter ending June 30th.
Good morning, Mr. Chairman. Can everyone see my screen?
Can you make that can you maximize your screen? For that window. Yeah.
Better?
I can see it, Chris.
Ken?
There you go. Yeah, that's better. It's because it's projecting up on the screen here, so I just want to make sure it's the board.
Is that better, Chris?
Yep. Okay, you're good.
Okay, so this is the first quarter of the new fiscal year, quarter ending 6/30/2020, and as you know, we provide our balance sheet and the account receivable investment reports as well on the quarters. I just wanted to point out a couple of things to you on the balance sheet. Our cash is lower than it was at the beginning of the year, but that's due to some high dollar receivables that got hung up at the state. You'll take note of the $8.5 million in operating assistance. That's largely due to the $7 million STOA first quarter payment that we actually did receive subsequent to 6/30. And also the prepaid expense of $7 million, and that is largely a $5 million escrow balance being held by travelers. Then moving through to the liabilities, that's really typically just timing issues. Nothing really big to note here except for the $2,500 line of credit. We did have to borrow that. But that also had been subsequently paid off when we received our STOA funds in July. Questions on the balance sheet?
Not at all. Go ahead, Christine. And okay.
Moving to the, can everyone see this spreadsheet? This is the P&L through June 30th. We did have a operating income of $4.4 million, and that is due largely to the accrual of the STOA of the $7 million. And on top of that, this $11 million that we pulled down in COVID funds that we received from the federal government. But I really want to point out to you the difference you can see here in our regular line, special line revenues, which are took a hit because we had reduced our service and we had temporarily suspended collecting of our fare box revenue. We didn't start collecting fare box revenue again until June 15th. So although we expect to see some of these funds to come back, we've lost those first 3 months of the year, and we're still looking at ridership that's lower than what we historically would expect for this time. Then onto the expenses. All of our expense lines are coming in below budget, with the exception of risk management, because of our excess liability policy coming in about $84,000 over prior year. But this is all due largely, all of this is due to the pandemic. And then I will point out to you down here this federal assistance of $11 million. You can see, so what we did, and Linda's going to go into a little bit of a detail on this here, but we did receive $33.5 million in COVID-19 grant dollars, which allows us to use 100% of our allowable expenses to pull down those monies. So what we're doing is we're reserving what we had budgeted for preventative maintenance for future years, because we are able to access these COVID dollars. And at the same time, you'll see that the state assistance of this $7 million came in at 28% less. I think that's just kind of like a rounding thing to the budget. It works out to be about a 27% reduction in STOA. And that's what we know right now through the first quarter. There's no way to know what the future will bring, but for now, that's what we have. And that completes the P&L. Is there any questions?
Yeah, Christine, can you just comment on cash flow?
Yeah, I'm actually going to let Linda speak to that. You know, our cash flow position is decent, Nick, because we do have access to those COVID dollars. So we've been able to keep cash relatively stable. Lynn, do you have anything to add?
No, the cash flow is included in the board report. And yeah, I think at the end of the quarter, we had sufficient cash in the amount of, hang on, I'm just going to that page. Yeah, at the end of the quarter, we have about 5.3 million, and that's including the insurance reserve.
Okay, I was just
Nick, also we did get, like I said, we received that $7 million STOA payment subsequent to 6/30, and then we were able to pay down our $2,500,000 line of credit in July as well. So we're holding firm for cash flow. Cash flow is, it's not great, but we're not at like the depth, you know, the cliff as we have been in the recent past.
My other question is, and I don't know if Rick, Brian, or Chris is going to cover this. Are we been notified at all regarding how the state is cutting 20% back to a lot of agencies? Are we, any news? Is it something that we're getting cut back? I don't know if there's any.
There hasn't been any official notifications, but as Christine mentioned, the STOA payment that we received, which was our first quarter STOA, so we should have gotten that back in May,
Right.
was about a 27.5% reduction. So yeah, it's significant.
Okay.
By notification, but by action. Right. Yeah. Basically sent us an email that, yeah, your check's on the way and it's 27.5% less than it was supposed to be.
Okay. That's pretty common the way they're doing things. Okay. Okay. I hate that kind of news, but it is. Okay, Christine, anything else on that?
Well, I do want to turn this part of my report over to Linda Beata. I want her to speak to the budget impact statement. This is something that's required under the Comptroller's Regulations 203.8, that at any point in time during the year, if you have a major impact to your budget, we are required to review that with the board and then submit that up to the Comptroller's office in Paris. So this is the format that they prescribed. It's not, I mean, it's intuitive enough so you can follow it. It's not, it's very condensed as far as the classifications go, but it does tie out to our original budget that was approved back in March. And Linda and her team went about making some assumptions as to how our budget is going to be impacted. And once you approve this, I'll be submitting this to the Comptroller's office in the Paris reporting system. I'm going to turn this over to Linda.
Thank you, Christine. As the report that you got in your board report was supplied to you via email from Carol this morning. I think it's also, she passed it out at the beginning of the meeting. So as Christine said, this statement is required by the Comptroller's office, and this has the revisions on it from the original budget. And I'm just going to speak to the largest assumptions. In charges for services, we reduced the budget based on reduced ridership trends and service contract changes due to COVID-19, and we reduced revenues due to the cancellation of the New York State Fair. Rentals and financing income were reduced for lost RTC parking and lease rent due to COVID-19, and our other operating revenues were reduced due to the loss of advertising revenue and parking rents due to COVID-19. Our investment earnings were reduced due to drops in interest rates. The state subsidies were reduced per the New York State DOT allocation, as we already discussed, and also as we conserve our state 10% match to our preventive maintenance funding. Federal subsidies were increased because of the federal CARES Act funding, and we reduced the federal PM funding to conserve for future capital purchases and operating expenses. We expect no change from the counties. They are still mandated to remit the local 18B match. And our MRT, we're holding flat. We had a small adjustment in this line for our asset disposals. Salaries and wages were reduced due to the cancellation of the New York State Fair. Other employee benefits, this was increased to revise our pension allocation for losses due to the COVID-19 impact. And professional contracts, supplies, and materials were held pretty flat because the impact in these areas are a net effect of some expenses increasing while others decrease. The other operating expenditures, we increased the budget as a result. This is a net effect of reduction in expenses due to the cancellation of the fair, and there was no need for services from RTA, as well as a reduction in our purchase transportation services due to decreased ridership, also in response to COVID-19. These reductions were netted with increases in expenses for our excess liability premiums, and we also added another $1 million in there for COVID-related expenses. And there was no changes in our capital plan at this time. So we were able to get ourselves to whole with these changes in the budget.
Good.
So this does require a board motion to approve.
Yeah. Anybody got any questions for Linda or Christine? No? Very good. Okay. Motion to the move to the full board. Luella, second. Tina, all in favor? Aye. Thank you. Okay. Jackie, you're going to talk a little bit about motion 4, our workers' compensation insurance renewal.
Yes, thank you, Mr. Chairman. I'm here today to present the New York State Workers' Compensation Program renewal. In the board packet, there was a fact sheet that was included. We've been with Travelers, this is going on to our 5th year. The policy that we have under the Travelers program is a deductible program where we're responsible for the first $150,000 per claim. Each year, the plan closes out after 5 years. The insurance carrier Traveler is responsible for all the claims payment thereafter. So I've also asked John Condon from Brown & Brown. They've been working with us for the last 2 years, since September of 2018, in which they've also been doing a great job working diligently to control our claims costs, premiums, and cash collaterals. So for this year, we're looking at an increase in the premium The premium consists of course, the fixed premium rate, the loss control fee, and any New York State surcharges and assessments. Last year, that premium was at $1.55 million. This year, we're looking at an increase or a renewal of $1.62, which is approximately $66,000 for the yearly premium increase. This is mostly driven by the fact that our payroll has increased. So that's why we're looking at an increase in the renewal costs. In agreement with that, we're also looking at an increase in the cash collateral too. Last year, our cash collateral was at 1.85, and the new cash collateral required for August of 2020 to August of 2021, we're looking at 1.94, so we're looking at approximately an $88,000 increase in that. Does anybody have any questions in regards to the renewal numbers or anything that I've presented?
Nope, pretty standard.
Okay, then I just need a motion in order to carry it forward.
Motion bring it to the full board. Robert, second. Darlene, all in favor? Okay, very good. Good job, Jackie.
Thank you.
All right, we're gonna go into resolutions. Resolution 3B, Utica Transfer Hub Janitorial Services. Caitlin, you're on the horn.
Great. Thank you, Mr. Chairman. Good morning, everyone. So this resolution is for the Utica Transfer Hub Janitorial Services. This will be paid for using operating funds. This is a New York State preferred source contract through Human Technologies Corporation as well as North Coast Window Cleaning. Both vendors do currently service our Syracuse Transfer Hub as well as the Regional Transportation Center. The first year of this contract, the total with the two vendors is $41,462.11, which is a decrease from our previous contract. The previous contract did expire as of January 31st of this year, so we are asking for a ratified award back to February 1st, 2020.
Okay. Any reason for the decrease? I don't see that too often.
Yeah, so the decrease, they actually went from utilizing mostly full-time employees to utilizing part-time employees, so really the benefits was the greatest reason for that.
Good job with that. If there's no questions, the motion bring it to the full board. Robert, second. Darlene, all in favor? Okay, very good. Moving on to resolution 3C, PDS Vista software renewal and maintenance. Caitlin, you're up again.
Yes. So the authorization for payment to PDS Vista for the software renewal and maintenance will be paid for using operating funds. This is our current human resources information system created by PDS. We typically go out for 1-year service agreements for this maintenance agreement. However, much in the same light as Trapeze and GenFair, we did look into a multi-year agreement. So PDS offered us a 5-year agreement with 1% increases yearly as opposed to the previous 3% increases that we are looking at. This system is proprietary to PDS, so this is a sole source purchase. So we're looking for authorization for the 5-year term through PDS.
Okay, any questions on this software? Caitlin, I appreciate the work with, thinking out of the box a little bit. With going with a longer contract, sometimes it really pays off. Good job with that. Need a motion to bring it to the full board. Luella, second. Tina, all in favor? Aye. Very good. Thank you. Okay. Resolution 3D, replacement door 6A at the Syracuse garage. Yeah.
Yes, good morning. Thank you, Mr. Chairman. Good morning, everybody. Garage door 6A is the entrance to the CNG fueling area. The original door is just a regular garage door, and it's been hit by buses, and the actual door has come down on buses. This is due to the fire panel. It's a delay in the fire panel. The CNG station is controlled by the Siemens software, which in case of emergency, the doors down, go up. With this said, we're replacing the door with a rapid roll door. The door will open in seconds, and if struck, can be replaced by the central staff. CNS engineers will be performing the work. They are currently under contract. There was no advertisement. CNS's proposal was $76,450, deemed fair and reasonable based on comparison with hourly rates, previous pricing from similar work. This is an 80-10-10 split federal grant. There's no MWBE or DBE goals on the project. Recommending issuing a PO to CNS engineers for the amount of $76,450 for the overhead door replacement.
Okay. Any questions on the door? I thought we were going to take all doors off in buildings these days. Keep the air moving. Okay. Motion by Robert, second. Darlene. All in favor? Aye. Okay. Resolution 3F. Resolution 3E. Repair Syracuse Hub sidewalk heating. Jeff?
Yep, sidewalks repaired. There was a while back, there was a water main break at the hub. This damaged the sidewalk and the snow melt underneath the street of Adams. There was previous snow melt damage on the Salina Street also. Both concrete and snow melt system needed repair. That's both Salina and Adams Streets. CNS will be performing the work. They are currently under contract. There was no advertisement. CNS proposal was $82,016. So this is deemed fair and reasonable based on comparison with hourly rates and previously pricing from similar work. The water main break had an insurance claim of $50,000, so we have $50,000 in reserves just for this repair. The remaining will be $32,016 and it'll be paid for with SDF. There's no MWD or DBE goals on this project. Recommending issuing a PO to CNS engineers for $82,016.
Okay, good. Good insurance recovery there. Need a motion to for the repair for the sidewalk. Darlene, second. Robert, all in favor? Aye. Okay. This is standard. Get a resolution here to add Chris Tuck as a signer to certain bank accounts. I need a motion. Move that to the full board. Tina, second. Darlene, all in favor? Aye. Also, accompanying that is to use Chris Tuff's facsimile signature on certain accounts. I need a motion. Darlene, second. Robert, all in favor? Aye. Okay, and now we're going to talk, Jeff's going to talk to us about the UV lighting system and recirculating heating and ventilation units. Jeff, I can probably give this report myself, how much I've been involved with that, but you do a better job. Go ahead, Jeff.
All right, just a quick note, there's a clerical error on the fact sheet. We'll have this corrected for the minutes next month. The process was through MCOR, not Life Safety. The UV lighting for the HVAC systems, Governor Cuomo has, and the New York State guidelines recommend installing ultraviolet germicidal irradiation lighting to deactivate airborne viruses. Germicidal UV lighting systems are proven technology in hospitals and air handling systems for over 100 years. These UV lights can be installed in all air handlers at every central location. MCOR will be performing the work. They're currently under contract, no advertisement. MCOR's proposal was $67,602.04, deemed fair and reasonable based on comparison with hourly rates and similar work. This will be paid for under the CARES Act and 100% New York State dedicated capital funds. MCOR has a waiver for MWBE. We recommend issuing a PO to MCOR for $67,602.04.
Okay, ladies and gentlemen, this is one purchase that's becoming quite popular out there right now with public building. Once again, this is probably, I would think, one of your best measures to do it because there's other solutions out there, but it could get quite costly if things don't retrofit in and everything else as far as HEPA, et cetera. So it's good. I'm glad that we're doing this, and it's about being safe. Any questions for anybody with that? That's for this building? Jeff, the question was, is this for this building that we're in?
It's for all buildings.
Okay, good. Very good. And it's through those monies that we received for this too. Okay, with that being said, in motion move to the full board. Luella, second. Tina, all in favor? Aye. Okay. Christine, is there any other business at hand today?
Yes, yes, Mr. Chairman, I'd like to just turn it back to Linda Beata. She had, we put in your board package a document called Sources of Funds, and I wanted her to just walk you through it so you can see what this is, why we're doing it. It's not a thing that we're going to be putting in our board package every month, but because of all the different moving parts, the team took it upon themselves to put this together, and this is something that we review ongoing internally. Next month, we'll go back to the normal M&T line of credit and the insurance reserve. Lynn?
It's Chris. As Christine said, this is not required. This is just something we're using internally for discussion to share with the executive team on a monthly basis, to show the sources of funds, the uses, the balances, the operating funding sources. Most of this has been discussed in Christine's report, but it shows the balances of the insurance reserve, the line of credit, our STOA, 18B match, which hopefully we will receive next month now that we received our STOA. This should be due the month after we receive our STOA. The federal 5311 rural funding and our mortgage tax. So this is what you're used to hearing us talk about on a monthly basis, these sources of funds. In addition, we have our CARES Act funding that we received for the COVID-19 pandemic. And we also have received some capital dollars for the pandemic as well. And lastly, we have our funds that were budgeted for fiscal year 21, our ONINA operating assistance, our preventative maintenance, and the state match to preventative maintenance. All these sources are still available to use for the future. So this is just something we brought forward this month just for informational purposes. And
good. We appreciate the extra information. It was good. Very good. Does anybody have any questions for Linda? Christine? Christine, once again, is there any other issues at hand?
That concludes my report. Thank you, Mr. Chairman.
Okay. That concludes our Audit and Finance Committee agenda.